All right, we're also keeping a close eye on shares of Alibaba after the company's earnings out this morning. Julie, all in all, decent quarter for Alibaba. It is the top trending ticker on the Yahoo Finance platform. I guess the main takeaway here is just like many other companies this earnings season, it could have been worse. Just given everything going on in China, Alibaba is saying revenue was stable year over year, and that looks to be what the market's locking in on.
I mean, there are definitely points of weakness in here, even though the numbers overall beat. Revenue from China commerce, which is its main business, fell by 1%. That's the first time it's ever fallen because this has been such an incredible growth company. Now, we know what's been going on with Alibaba, that regulatorily, that's one of the things that's been holding it back. So that's sort of an external push from the Chinese government that is out of investors' control. It's largely out of Alibaba itself's control. So it looks like that because it and corporate Chinese companies, are coming out of that's going to be potentially a positive sign for Alibaba and for the rest of the sector. But, it's still something that can be unpredictable and that investors need to keep an eye on, even as, to your point, the numbers are not terrible, right?
We're seeing Alibaba really, that put cast a positive light on a lot of those stocks we're showing there on the screen. Of course, a lot of those are its competitors as well. But really, a lot of mixed trends coming out of China. You had Starbucks this week. I mean, really dreadful sales out of China. Alibaba talking about stable results. And in that context, fascinating note by the team, long note by the team at Goldman Sachs. But the main takeaway, they're saying they're still overweight, or another way of saying they're bullish on China equities and forecast 24% potential returns over the next 12 months for China. That's a pretty big call in the context of potentially more lockdowns and slowing GDP in China. Yeah,
they do warn that things are going to be bumpy, in part because of what's going on politically. And of course, the most recent example of that was Nancy Pelosi's trip to Taiwan. And now China is reportedly conducting military exercises, including shooting missile tests, sort of in Taiwanese waters. So that's something that Goldman acknowledges is going to be an issue. Morgan Stanley also talking about short-term volatility surrounding those events. But Goldman's trying to sort of look past that at that longer time horizon for better returns.
Yeah, it's been amazing to see some of these moves in these China-focused stocks. I guess the read would be, as long as the Chinese government is not getting actively involved, like we saw, earlier this year, later last year, it's okay.
I guess that's...
there's no other way to look at it.
I like that takeaway. All right.